And now today's featured speakers are Professor Anurag Wakhlu, Sal Ternullo, class of 2014, and MS in Accounting, class of 2018, and Vinay Gokaldas, class of 2010. Anurag is currently an adjunct professor in fintech at Bentley and advisor to several startups in cybersecurity, news, and the financial ML/AI space. He brings a powerful combination of both investment management as well as financial services technology experience spanning 25 years. During the last decade, Anurag was the Global Business Director for Financial Services at Dassault Systems. He has delivered strategic business value through global enterprise solutions and created sophisticated applications for investment and risk analytics, trading, and business intelligence. Anurag has an MBA from Babson College, although we won't hold it against him, and a Bachelor's of Technology from the Indian Institute of Technology in Bombay. He's also a CFA Institute charter holder. Sal brings more than 8 years of experience researching and operating on the edge of institutional engagement in crypto and digital assets, building first within financial services at State Street and currently as co-lead of KPMG's crypto asset services in the US. He has been featured in a number of media outlets and publications focusing on crypto assets and digital currencies, including FinTech TV, On the Brink with Castle Island Podcast, The Block, and more. Vinay is the founder and CEO of Passive Financial, an AI-assisted wealth management app based in Dubai and currently in beta. A Falcon Society member, Vinay graduated with a Bachelor's of Science in Economics Finance from Bentley before working in asset management for a variety of hedge funds and family offices as a quantitative trader and developer. He also holds a master's degree in computer science from NYU. So without further ado, please join me in welcoming Anurag, Sal, and Vinay. Thank you.
Thank you for that introduction, Emily.
Thank you, Emily. So good afternoon and welcome again. Let's dive right into the business of NFTs with a pop quiz. But this is going to be the easiest pop quiz you have ever taken because all the answers are NFT and the questions are rhetorical because nobody can raise their hand or we can't see you. So hopefully you can see my screen. Anybody know what this is? And I'll just pause dramatically for a couple of seconds, assuming you're thinking about it. Some of you might know the answer, but this is art, okay? Questionable maybe in the minds of many people, but it is art, the NFT for which sold for $69 million at a Christie's auction recently. The artist is Beeple, okay? And that was the reaction I think a lot of people had to when, to not just this art. I mean, I like the art, it's good, but the fact that it sold for $69 million. Now, those of you who think they have lost out on this Mona Lisa, here's another image. And you can buy this off of eBay for $69 without the million. Or if you wait for a crash, probably 69 cents. And we'll get more into being able to copy these things. Same artist, Beeple. This NFT art sold for $7 million US. Jack Dorsey, the founder of Twitter, this was his first tweet. This was sold for $2.5 million. And the good guy that he is, it was donated to charity. But if you're feeling artistically challenged with all this nice art, you can make a 24 by 24 pixel, as you see on the right side here, which I think a first or second grader can do. These are CryptoPunks, and they're selling for hundreds of thousands of dollars. I'm not kidding you. This cyan cat, an animated GIF on the left side of the screen, sold for $500,000. It's big business. Guess how much this went for? Again, dramatic pause. I know I've anchored all of you for millions of dollars. This is just a mere $3,600. This is called the Gucci Ghost. You can see the Gucci symbols out there. It's a Gucci Ghost artwork, I guess, $3,600. But back to inflation. I think this is the mother of NFTs. This was 2018 Crypto Kitties, before NFT became what it is now in many ways. This one sold for $170,000. Okay, enough about art. Guess what's common between all of these unknown poor people on the slide? You guessed it absolutely right. All of them have either made, sold NFTs or are launching NFT companies. And I don't need to take any of their names. They're known pretty much across the world, maybe, you know. And I didn't put Grimes up there just because that's the only picture I could find for Elon Musk. Grimes, on the right of Elon Musk here, has made 6 million selling NFTs. Okay? What's common between these people? And if you guessed NFT, you're wrong. This is a trick question because remember I said it's a pop quiz? They're just all ex-US presidents, that's all. Okay? However, I think one of them will surely get into NFTs. And obviously that's the coolest one in the center. But NFTs are serious business now, as you can see, with all the money being made. This is, you know, SNL, Saturday Night Live, parodied NFTs recently. And if SNL parodies something, it has arrived. The New York Stock Exchange is launching first trade NFTs of Spotify, Snowflake, and many more companies. These are like first day covers from like decades ago. And that's coming from the New York Stock Exchange. Global fashion brands, Gucci in the case, as you saw earlier, are jumping into NFTs. You can buy a column written in New York Times or any other publication, for example. So one column here, an NFT created from a New York Times technology column sold for $500,000. Okay, so again, rhetorical question, show of hands, are you excited about NFTs yet? And I'm guessing at least, let's say 30% of the hands out there are up. Okay, NFT sales are topping 2 billion just in this quarter. You can see this headline is from this morning, 2 hours ago, 2 billion in NFT sales. Okay, hopefully you should be excited because Paris Hilton is excited. Paris Hilton has made a good amount of money selling NFTs. And she recently wrote a blog about NFTs and artists and creativity. So you should be excited about NFTs. And with that, we end the TMZ portion of today's discussion. And now let's get right into what is an NFT and the rest of the technology and the future and a lot of the other questions that speakers have brought on. So this is just a very, very, very simple definition that I have here, but now I'm going to turn it over to my esteemed colleagues here to dive more into the rest of this. Vinay?
Thank you, Anurag. I really appreciate that introduction, and I love the slides that came through. I'm going to start by saying I think you know, the NFT innovation within the crypto space, I think is incredible. It represents nothing less than potentially a new asset class in the financial sphere. And whilst, you know, traditional art investing and art, digital art has been sort of the medium that has been attached to NFTs thus far. I mean, we shouldn't forget that NFTs can also support other forms of media, like videos, GIFs, music. I mean, we recently saw Kings of Leon put their album up for sale through NFT. You know, in this, within the space of media, just on this topic, I think there's been an incredible flattening of the supply curve over the last, you know, 10 years or so, as streaming media has sort of hit the space. You know, everyone consumes a song today via either Spotify or SoundCloud or YouTube. And and the ease of access to that music, that sort of the Napsterification of MP3s around the world has effectively reduced an artist's earnings to bare minimum. I mean, today you need about 1,000 streams to make $5 from Spotify. So I think NFTs, in a sense, one of the most primary things that are coming out of this right now, that we're really that's really making a mark, is we're putting the artist back in the center of the value chain, and really giving the artist control on monetizing his or her creation, which is a phenomenal thing. Are we in a bubble? I think we certainly are in a bubble. I think all innovations that have a dramatic impact on the world will start off as a bubble. The cryptocurrency space certainly is going through a similar phenomenon. But I think art investing, if you look at it from the lens of wealth management, is having a bit of a shift in a bit of a transformation moment right here. We think about art investing today, and you look at an artist like Basquiat. His art is appreciated by about 18% over the last 20 years on an annualized basis. Art as an asset class, high-end art as an asset class, has appreciated by about 9% on an annualized basis, pretty much tracking S&P for that matter. So from a wealth management perspective, the first question on everyone's lips is the painting that I bought last year losing value now because of NFTs? And the answer to that question is no, it's probably not going to be that case. But I'll also give you this stat. You brought up Beeple as a first slide on your presentation. And, Beeple's work was acquired for 69 million. And 80% of those bidders on Christie's were first-time auction, participating in an auction, and they were not known to the auction house. So there is a sense of NFTs ushering in a new generation of investors and a new form of art investing, which is great for employment, which is great for jobs, which is going to open up new industries, the same way crypto has. But some of the other things, that wealth management is probably going to be concerned with, and you as an investor are going to be concerned with as far as portfolio investing into NFTs, is how do I go about buying NFTs? Where is the custody of NFTs really kept, and what are the rules around custody? How do those rules affect the geographic location that I reside in? What if the government in the country I live in has a ban on crypto, like in India? How does that affect my ownership? How do I take ownership of NFT in that case? These are really interesting questions. And Sal over here in the panel has spent a considerable amount of time at KPMG, looking at digital asset custody. And I'm sure he's going to speak a bit more to that. But there are lots of questions that are opening up right now about how investors can have exposure to this asset class. And just for the folks out there who have never sort of really taken a look at NFT, I just want to say real quick, it's as easy as going on one of the exchanges, NFT sort of exchanges right now, like Rarible, Nifty Exchange, and setting up an account, uploading a piece of art or uploading some digital medium, and setting a price for it really, and just listing it. You pay a small fee in crypto to that exchange or to that sort of marketplace for keeping that up, and then if there's interest from the community, they're going to pay you in ETH. But one of the incredibly founding characteristics of NFTs is whoever purchases that NFT potentially has a future income stream from subsequent sales that happen further down the line, which on its own is pretty transformational. You think about it in the grand scheme of things. Like if an artist, I create a painting and I sell it, and that person sells it, and that person sells it again, I'm collecting a fraction of that sale each and every time. That in itself, I think, gives the blockchain a lot of credibility, in this regard. And if you look at media today, just going back to what I was saying about YouTube and the SoundCloudification and the Napsterification of MP3s and sound. I mean, think about what's happened to hip hop or urban music over the last 10, 15 years. I mean, we're listening to noise now, guys. It used to be amazing music. And I'm pretty sure a lot of the folks here are going to agree with me on that. But why has it become noise, right? It's become noise because it doesn't fetch it doesn't fetch much of a return anymore, the artist, because we can duplicate that. But what if every Spotify stream could literally be controlled by the artist itself, and the artist could have a stake in determining the price of that stream? It really puts control back in the artist's hands. But I want you to take a step back and think about this now. Imagine you had the opportunity to invest in upcoming artists, right? A favorite, hometown band. You think they're gonna make it big, right? They put out their album in NFT, and you have a chance of being one of the first owners, the actual ownership of that album. You effectively can now cash in on subsequent streaming that happens off that album in the future. So if you think an artist is going to be, really popular in the future, and you love their music, and you purchase or you fractionally buy into that NFT, effectively you can use that as an income stream, especially if they blow up and they become popular. So the financialization of, and this whole new opening up of being able to bank on some of these media is really going to bring that supply curve back. And I think you're going to see that the quality of art, maybe, and when I say art, I'm obviously talking about media as well, and music, films. The quality is probably going to step up. We're gonna have two parallel economies running, right? The one on YouTube, and then the one on the blockchain, where potentially the quality of that art is just much higher. So that's some of the interesting stuff that I'm thinking about right now, as far as wealth management, as far as ownership, as far as investing in NFTs. And I think, Sal, you're probably in a better position to speak about custody, for that matter, and how NFTs can be vaulted, and things like that.
Yeah, absolutely. And I think I'd echo a lot of the points that were made, both in Anurag's introduction and also in Vinay's kind of setup. I think centering on the idea of NFTs enabling content creators and owners to financialize, if I steal your words, their own product in compelling ways is really like a democratization of an industry that has had a number of issues with relation to asset provenance, and secondary markets and traceability of secondary market activity to an initial producer or creator. But my angle on this, to Vinay's point, is more so from a technology perspective. So in taking that kind of line of thinking through the technology angle and addressing custody as well, the real first use case, which Anurag pointed to for NFTs, was in 2017 and 2018 with the launch of CryptoKitties, which we saw one of in an image. And it was really the idea of producing a token on the Ethereum blockchain, a unique digital token that represented the ownership interest in a digital art or good. And so this use case at the time, although it may seem edge and fringe to many of us on the line, ended up having such a massive user adoption and demand model that it caused significant congestion on the Ethereum blockchain, and actually caused like some level of defrayment from the Ethereum blockchain, saying this blockchain is not designed to support a use case like digital collectibles, where CryptoKitties had proven that there's user demand for that. And so the organization behind CryptoKitties spun out and started building their own layer one blockchain network for NFTs, now called Flow. And the team, Dapper Labs, comes back to the kind of VC funding landscape, recently just completed a round for more than 300 million. And they've already generated more than 100 million in revenue in the first 9 months of their existence. through this NFT craze, which comes back to another point Vinay made previously in terms of kind of where we stand in this cycle, in that, there's been a prolific rise of focus in the pop culture and in very public spotlights that crypto did not receive that level of quick expansion in public consciousness that we've seen with NFTs. And so I think the bubble has happened way faster than even the ICO bubble happened in 2017. But it's indicative of innovation cycles like the transformation of capital formation, which was ICOs and token raising. And this is going to be digital ownership of, either digital or physical goods. And so from the technology landscape today, there's kind of two core components to looking at how we think about NFTs. And this is from my perspective, but also in the context of, the view we framed at KPMG, is really around NFT marketplaces, which Vinay spoke to briefly in terms of places like Rarible or OpenSea, Nifty Gateway, where you can, as an artist or creator, you can go and issue and push your digital NFT to a marketplace, and then as a buyer and consumer purchase them. There's different economic models around how those marketplaces work, but they're really kind of the first core NFT platform technology. And they're developed on different blockchains. So Flow is a layer 1 blockchain that has enabled these marketplaces. And then the third element of kind of the technology perspective on this is around custody, which Vinay pointed to as well. And it's not specifically a technology issue, it's a multifaceted issue around ownership and how that plays out in jurisdictional boundaries. There's major tax implications to that as well. And so custody is a unique challenge in and of itself, but basically relates to how you control the ownership interest in an NFT or a crypto asset. And it comes down to the management of cryptographic keys, which are used to control the on-chain address of your asset. And there's a significant risk profile around custody, given the nature of blockchain technology and the finality of transactions that happen on public blockchains. And so the custody challenge is one that has also spurred, similar to the NFT marketplace segment, a robust product segment of third-party technologies, as well as licensed providers of custodial solutions, many of which we partner with in the market, like BitGo and Coinbase Custody, Fidelity Digital Assets. And so, in looking at the NFT technology world in summary, we're really thinking about layer 1 protocols, so blockchains themselves that are designed to support NFT use cases in terms of performance, scalability, et cetera. Then we've got NFT marketplaces, which really facilitate the user interaction and the secondary markets around them. And then there's underlying custody that enables the secure ownership and control of NFTs that are purchased either through a marketplace or in some cases directly on a blockchain. But I'll pause there in summary. I think hopefully that rounds kind of the tech angle per se, in terms of maybe a little history of where this NFT craze started and what the more mature viewpoint of kind of a technology ecosystem looks like today in 2021. I know we got some questions coming in from the group and audience as well, and Emily can jump in here and queue those up for us.
Thank you. Thank you guys for getting the conversation started. So we already have a few questions and we have some from those that were pre-submitted as well. One question that came in as Vinay was speaking about the use in the music side of things was, do we think NFT usage will find its way into film and TV creative content via maybe one of the streaming services?
I'll jump in. Yeah. This is something I've thought about. I mean, and I'm sure Sal can say something about this as well. But if you think about it today, every time you go on Netflix and you press the button to play something, right? Netflix is keeping track of that count, and their database just keeps piling up with all that data, and then they serve you better with AI and stuff like that. But the content creator has just got a flat fee, right? Netflix will go out there and just put out a bid for that series and pay out that production studio for putting the whole thing together. The actual profit off of it is Netflix bearing that risk, right? So if you think about crypto, imagine today you go on Netflix and that's a blockchain streaming show, and effectively every time you press play, Netflix gets a cut, but also the streaming production studio gets a cut. So it's a phenomenal way for Netflix to de-risk, but at the same time, Netflix also needs to share in the actual legitimate profits of the enterprise with the creator. So is it possible Netflix is going to do this? I don't know, but it's not unfeasible for there to be a completely parallel Netflix that's just running off NFTs that are put on the blockchain effectively in the form of film. So I mean that's incredibly good question. Definitely the fact that these tokens have cryptographic nature, have smart component embedded in them, means we can build in these functions. And if these functions aren't built in, what you can do is, like Sal said, you could throw it into custody, and you can create functions around the custody to manage the NFT. So definitely, I mean, the possibilities are incredible. And before Sal said, I know Sal's going to say it as well, but you can also stake these things. You can borrow funds against these assets. So if these assets are on a marketplace with a track record of sales, there's a whole world in the crypto space that is willing to lend to you at probably a lower interest rate than you would get in the real world, because they can immediately take ownership upon default. So these smart contracts have really brought down the premium of the friction that we see in the real world when we're dealing with transactions. But I'll leave it to Sal to kind of let me know his thoughts on that. I'm quite interested to know what you think, Sal.
No, I mean, I agree and echo, the majority of your points. I think the theme that I come back to that, like, kind of accelerates this whole discussion is around the point you made on Christie's and the new market entrance and how 80 plus, participants or new engagement in that trading venue or that listing venue for auctions. And those are largely, and in many cases, entrants that are coming from the past 10 years of financial wealth generation inside of Web3, whether that was from the Bitcoin community or a number of the other, Ethereum or any other smart contract platform community at layer 1 that's been incubated and built. And so, there's an element of like accelerated cycles now that there's significant wealth within the kind of edge of innovation in the space, and NFTs are kind of capturing a lot of that right now.
And a joking question, but one that you both have addressed, and you too, Anurag, was around who is it that are buying NFTs. So perhaps you could speak a little bit to the audience for NFTs right now. Is it everyone? Is it, what's the US market versus other countries that we're seeing?
Sal,
Anurag, I don't know if you want to start. Yeah,
I mean, I kind of touched on it a little bit before, and I maybe just like reiterating it and then passing it off to Vinay if you want to pick it up. It is really a lot of the people that are investing early in the NFT space and have been through 2020 were early movers into the crypto space as well. So people who were seeding protocols and participating in pre-token sales of major networks that have achieved significant adoption based on their community, based on their incentive systems, based on their developer productivity. And so with all of the wealth that's been created in a now $2 trillion asset class, you've got a lot of people who were early and high risk as it relates to emerging technology adoption. And so have been very engaged in terms of the NFT demand model. So you've got an organic segment of high net wealth individuals who are participating, but then you've also broken through the pain of broader public consciousness with all of these major icons coming forward and leveraging the technology and the brand name around this. And so it's almost like it's been a convergence of crypto native investing alongside a whole new entry of market participants that previously hadn't been engaged in the blockchain discussion, at least in a meaningful way. And now they're touching and seeing and feeling what it means to have digitally scarce ownership provable on a blockchain for the first time. It's really, really powerful. Like, saying for my dad to be able to say he owns some prolific Larry Bird shot and the 5-second ownership of him hitting a game-winning buzzer, like that is nostalgic memories of times that there's no money to define the value of those things. You've never had the ability to provide an experience to a consumer like that, and NFTs are transforming that ability. So I think the customer segmentation on this and who's actually driving buying volume pricing, like it varies significantly, but it's a pretty broad and diverse market.
I think I'm gonna just jump off exactly where Sal just left it, and it's in such a broad spectrum of folks, and I think we're starting to see the silos, right, start to come out. You got the virtual worlds that are selling virtual items, and this was something we spoke about in the pre-session. I think we should definitely touch upon this. The whole VR space is such a perfect target for the NFT play. I mean, it's incredible, right? So, you have the virtual reality heads that are going out there and buying these sort of virtual homes in a virtual world. The other day, I was doing a bit of research, and the Burj Khalifa, which is the tallest building in Dubai in the world, is up for, like, units in the Burj Khalifa are up for sale in the Dubai 2.0 virtual world. So, who's going to be buying those? I really have no idea, to be honest, guys. I have no idea. But if you look at some of the art investing that's happening, sure, some of it is mind-boggling, like in terms of the valuations. You got GIFs of fruits spinning around going for $3,000. Are these kids that are buying it with crypto money that they got lucky on? Possibly, right? But I know there's an incredibly sophisticated segment of the population. They're hedge funds, they're asset managers that are looking at this and saying, this is trading and this is volatile, and we like volatility and we like trading. So we're going to jump in this space and throw some of these things around. We're going to put a $200,000 book behind this to start. Let's see how it goes. Let's bring on some traders who understand this space. Let's bring on some analysts who understand this space. And I think some of the art investing that's happening is not so far away from some of the research that's happening behind actual high-end art investing. So today you look at high-end art investing, you're looking at the cultural significance of the artist. You're looking at the contribution to humanity. You're looking for differentiation, uniqueness, and it's not so different. I mean, it's really not so different in the NFT space. And whereas in the past or sort of in the tangible world, you're going to go to museums and find out who's collecting some of this art, who's collecting this artist's works. You're doing the same thing online on Google Trends, right? You're searching who's really looking up this artist on Google Trends. Where are these silos? Where are these countries? Where is his fan base? How many followers does this guy have on Instagram? So it's turned into a digital research about the art, and so it's a extremely broad spectrum. I think there are definitely some investors who are getting completely shafted for their money right now. But there's a whole bunch of guys who are extremely savvy and sophisticated and are purchasing this with a view of holding it for maybe 2 or 3 years, hoping for the next sort of pop in this space.
Yeah, and I agree. I think there's 2 key things here, and I think Vinay, you mentioned one of them as well, was I think because it's very volatile, right? I mean, I've seen examples of where people just buying and flipping, right? It's a new asset class in some ways. I mean, not in the traditional form of the of that sense of the word, but it's something you can trade. It's volatile, right? And that brings in a host of people, possibly like the sort of the alter ego of Robin Hood traders who are now trading crypto assets, right? For example, and just making money off this volatility. Buy for 20 cents, sell for 40. You've actually still doubled your money, even if it's 20 cents multiplied by 1,000, right? So there's that aspect of it. And I think on the creation side, one important thing, a very key thing that Vinay mentioned earlier is this whole idea of, sort of a royalty stream that you get, right? So you're walking around in, I don't know, in Thailand, and you come upon this undiscovered musician and you NFT their song. Now for their life, or God knows, for the life of blockchain, you're getting a royalty, that kind of business model. So you can literally start off with, if you have $1,000, that's, whatever, times 100 cents. And if you can buy NFTs for a couple of cents, you've diversified. It reminds me of those people who used to cyber squat the .com domains in many ways, right? When they were selling for cents, because who knows what company might come up, what domain they might want, because it catches their fancy, or the company's called Uber, right? So uber.com, and etc. So there's so many, we're just literally scratching the surface from a business model perspective of what's possible here. But meanwhile, there's a lot of, early tech adopters who are jumping in on this and making money, not to mention the gentleman by the name of, I believe, Metkovan, who paid 69 million for the first 5,000 days, the first image I showed. So it's rapidly evolving.
I think, Anurag, that this whole idea of the new businesses and scratching the surface is quite real. Sal, I don't know if you want to jump in and talk about that VR museum. I think that's extremely interesting because just some insight. In the art world, guys who take ownership of very high-end art pieces then would rent it out to galleries, right? They would actually rent it out for showings to galleries, and that's somewhat of an income stream, both for the gallery and for the owner. And you can see this already starting to happen in the VR world with the NFT. So I know, Sal, one of your buddies is huge in this space. So why don't you tell us a bit more about that?
Yeah, happy to do that. So it's a cool embodiment of what digital NFT art will become in the future in virtual realities. One of my colleagues, Colborne Bell, and another gentleman, Pablo Rodriguez Frail, founded what's called the Museum of Crypto Art. It's called MoCA. You can look up their Twitter and follow them. But they developed a virtual reality museum within the Somnium virtual reality space, which is a blockchain-enabled VR world. And it's similar to Decentraland, which I think there was a question about in the chat. So there is on a broad basis, a massive intersection between virtual reality and non-fungible tokens. The Museum of Crypto Art is one that shows you a very early use case and business model of how, to Vinay's point, you might be able to monetize and create revenue models off of NFT art in a virtual reality world, whether that's through direct listings within a gallery that you can jump into with a headset and like go see and experience. And it's a totally unique dynamic in doing that. But there is something to be said about how blockchain enabled metaverses will intersect with all different sorts of NFT based art, media, et cetera. So it's an exciting space. I would look closely at all those VR and blockchain based worlds. They're very new. Like these are still, early stage development, but very, very cool.
And one quick thing to add to that also that was mentioned earlier, the underlying ability for this blockchain technology and this ecosystem to do what we call in the financial world attribution, or giving the money to the artist, but the entire stream of people in the value chain, which is made possible by these smart contracts, right? I think that sort of very underlying theme is very, very powerful in a very broad adoption of this entire ecosystem, not just NFTs or art, but the fact that now for digital assets or for the foreseeable future, somebody who created them or somebody who distributed them, the entire value chain can be paid for it in simple terms, right? So the example, I think, when you mentioned Netflix, like the blockchain version of Netflix, right? It might be Netflix doing it, or maybe a new Netflix will come out that will say, hey, content creators, we are giving you a platform in distribution the eyeballs for this, right? But you will get paid a couple of cents or whatever for everything you put on this platform, right? And that is a very powerful concept, sort of driven forward by the fact that you can encode this in smart contracts. So there's that trust element to it, which was not possible before because it was centralized, right? So that's a big driver of this entire ecosystem as well.
To that point, we did get a question asking about exploitation. So if a broadcaster who has rights to use and exploit is the word, an artist image, would that be sufficient to create and exploit an NFT, i.e. the right to create and sell it? So maybe you can talk a little bit about just making sure that the creator of these NFTs is the one that's benefiting. I mean, what are the risks of exploitation for creators?
Yeah, the IP question broadly in this is one of, I think, one of the challenges and hiccups that the space will face broadly. There's going to be a lot of thought process, effort, time that goes into solving all the different legacy models of ownership and licensing as it applies to NFT creation and monetization around different NFTs. And it gets super complex when you get into these like agent-based models that exist and have existed, frankly, to enable people who now have access to capital, to markets, to infrastructure that they didn't in the past. And so, you know, I think I'll leave the legal discussion there because I'm not a lawyer by trade, and I know there's massive complexity to be solved for, but yeah, I don't know if Vinay or Anurag, if you have a point or further depth on the IP and legal side.
Yeah, no, you know, Sal, it's incredibly complex right now, and I don't think the jury's out on exactly how this is going to look. But I'll give you guys what I think is going to be a taste of the reality. You know, if you go on, if you're listening to music today and you have the Shazam app, you can pretty much use Shazam to tell you what the song is, right? So, you know, if that same technology is used today in Facebook, right? So when you upload something on Facebook, like a video, and you overlay that video with an artist's song, like a song by Drake or Rihanna, you know, you're going to get a prompt from Facebook saying, you know, you don't have rights to this, and you need to get permission or upload permission that you have in order to use this. It happens sometimes, and it doesn't happen sometimes. I mean, it's not really sure how Facebook's algorithm's working around that. But you can think of, you know, let's take Instagram, which is how sort of images are being really consumed today in mass, right? You know, you can imagine that if Instagram comes up with a filter, they can use AI technology that's available today to effectively trace ownership of that image down to whoever's holding that NFT. And they can prevent you from actually posting that, or they can blur it out and say, you know, this owner would like to charge you $1 to view this image. You know, and that's going to be a collaborative thing. That's going to be a, you know, Instagram and some of these larger tech platforms coming out and saying, we are going to enforce ownership rights of these images and consumption of it through our platform. So you're going to have to go on a black market if you want to look at that image, and it's going to be up to Google, you know, and jurisdictional data privacy laws in each of these countries in terms of enforcing that. You know, you don't you know, what's the right word? Don't you know, don't expect Europe not to start looking at this. I mean, the Europeans are the first guys to jump on everything to do with data privacy, and you know, they're probably already thinking about it in terms of NFT, especially with the fact that now you have traceability, right? With the Mona Lisa, if someone takes a picture of the Mona Lisa, puts it up on Instagram, at that particular point in time, there's no actual electronic trail or audit back to who exactly particularly owns a Mona Lisa at this particular point in time, right? I mean, we all know who does, but I'm just giving an example here. But if you think about NFTs, there's going to be an algorithm that can actually check exactly at that particular point in time who owns that, and check if that owner is allowing for digital medium and large scale, you know, media sharing websites to allow the viewing of that. So you know, that's, I think, a little bit of a teaser of how it's going to work out. It's going to require a bit of coordination, but we're already seeing it on the music side. When you try to upload music that isn't yours, some of the YouTube algorithms are picking up on that and saying, this isn't your work, right?
I would just add to that don't hold your breath for allow that to be solved quickly. I mean, we still can't figure out regulations around self-driving cars or the ethics of AI, which have been around for a lot more than NFTs. So it's again scratching the surface. But one of the things you mentioned in the end, Vinay, that's again very powerful, because you could take that model, and the technology for that exists. I mean, today, if people tag you or they upload a group picture of you on Facebook, Facebook suggests to you, just by, obviously their technology, that, hey, you got tagged, or do you want to accept the tag, something like that, right? And so you're talking about a mass sort of planetary level, big tech saying, oh, somebody just uploaded a picture on Instagram, but that picture, its NFT was sold 2 years ago. So they really, and it did not have reproduction permits for it, for example, right? Because today you can just copy the Beeple first 5,000 days and, install it on your wall if you want, doesn't matter, right? But that's like a whole different paradigm of global big tech coordination around being able to reinforce or enforce these kinds of, and that's, about 20 years in the future, I guess.
Well, with that too, we did have a question earlier that I know was touched upon briefly, but the question then about ownership and trade. So what are the main legal considerations and or risks in terms of regulation, in trading and in buying and selling, especially across borders?
I'll jump in there and talk about a little bit about that, Emily. I think it's really just, the company that's providing you the crypto wallet, the exchanges that are selling you your crypto, which you're then eventually using to purchase the NFTs or to purchase other crypto tokens for that matter. Obviously, the nature of the entire business is so decentralized. At any particular point in time, you can't exactly claim a domain ownership or geographic ownership to some of these tokens. And maybe jurisdictional law is going to say, look, the provider of the wallet infrastructure is going to be how we're going to determine if it's jurisdictionally within our reach or not. I think the jury isn't out on that necessarily. I think, Sal, you may be able to touch on that a little bit.
Yeah, it's an interesting and again complex question and answer, because depending on jurisdictional treatment, you've seen, and this is on the crypto side of the spectrum, not as it relates to NFTs. So it's drawing a parallel of what's happened there to what may happen here. And in Hong Kong specifically, there's requirements for physical location of the actual key material that controls the ownership of a crypto asset. And you saw that precedent kind of reemerge in some of the Wyoming regulation that then got removed from that around speedy banks. But it is the idea of like, where does the control of the asset actually lie? And especially in the context of a fiduciary relationship is a very important question that all regulators are looking at. In the US, as it relates to crypto assets, from a qualified custodian perspective, there was an SEC letter that basically put out a staff perspective around control of keys in a break glass scenario and qualified custodians being able to move an asset on a public blockchain on behalf of their asset managers or whoever their customers are that they have a fiduciary responsibility to. And so I think on the NFT side of this, like, it will come down to some similar complex jurisdictional conversations around how do you manage cryptographic keys. And I think to Anurag's point, these are conversations that will become, maybe a clear regulatory mandate in 5 years. There's definitely a lot of great work going on a global basis, but as it relates to NFTs and the related accounting and tax implications, these are the first hype cycle of major capital investment and innovation has just taken place over the last 6 months. Like, regulators need to deal with DeFi first, and then they'll figure out NFTs in a little bit.
Yeah. I think, Sal, depending on where you are right now in the spectrum, and there's no question that some of the innovations within the crypto space, I'm speaking generally, not just about NFTs, but have enabled some form of money laundering. And, cross-border flows are typically untraceable for that matter. When Bitcoin is sent from one wallet to another wallet, you typically don't even know where the second wallet's sitting. And you actually won't ever be able to know or take accounting or accountability for that Bitcoin until that user decides to actually cash it out back into fiat through a regulated exchange. In which case, the burden of tracking that ownership and flow falls on the regulated exchange itself. So, I think regulators are slightly behind the curve. There's no doubt about it. It's enabling a ton of money laundering to take place in the space right now. I think that's really what gives crypto and blockchain, for that matter, unfortunately, a bad image. But you're seeing slowly that regulators are catching up. For those folks out there who are interested in this sort of thing, I would refer you to the Abu Dhabi General Market, which has come up with a crypto asset regulatory framework, which is probably second to none. And it's really interesting how they're looking at it. You as a digital asset owner effectively are going to just be monitored to a higher degree, and you're going to be expected to provide a lot more transparency, which I think is going to be the reality of folks who want to move between fiat and crypto. Of course, if you want to just stay in the crypto world, no one's going to ask you questions, and really it's quite anonymous, as anonymous as it gets, to the degree that you want it to be.
Thank you all. To end, we have about 10 minutes left. And so we just got a new question about Bitcoin. So, somebody wants to know if we'll have an event or conversation in the near future about investing in Bitcoin 101. That would be a good part too of this conversation for sure. But another question that was submitted ahead of time that would be fun to know is, what are each of your favorite NFT projects at the moment?
Maybe I could jump in first. So I mentioned the Museum of Crypto Art from a VR perspective. It's super cool. I think that's a very interesting project. But more recently, one of my colleagues in the space, John Sciana, founded a company alongside several other co-founders called NFTs, which is backed by a number of household names, including Mark Cuban, Joe Lubin from the Consensus team. And they're building the first NFT platform for social media. And so creating ecosystems where content creators actually own the content that they create, can monetize it in different types of gallery or viewing experiences, and have the ability to dictate the terms around them. So I think NFTs in social media will be a very, very powerful and democratizing solution that transforms the value chain of how social media has really been embodied in Web 2. So I think Web 3 social media is going to be a very exciting segment for a lot of people, right? This is like people producing content that right now are monetized through advertising schemes, but now will have the ability to directly, monetize their own work in a way that is less at the whims of, other organizations seeking economic gain.
Awesome. I think if you look at the NFT space particularly, I think I'm probably most excited about this whole idea of fractional NFT ownership. So NFTs currently only allow one person to own an NFT, right? You have to be a single owner. But there's this project called DAO FI, which has launched a decentralized exchange token, forked from Uniswap, which will allow the trading of fractionalized NFTs. So some of the more expensive stuff, you and your friends can get on it together. And I think that social element to NFT investing is quite exciting. It's obviously a spin-off on the whole fractional shares thing, which has been a phenomenon over the last couple of years. So I'm pretty excited at that. I think it's going to also further democratize the space a little bit, especially if NFTs retain the $1 million price tag that they're going for these days. It's going to be a lot easier for some of us regular folk to jump in the game.
Actually, I saw a headline yesterday where I forget the name of the company, but they actually released tokenized single shares. I don't remember if they were NFTs or just general tokens, but they must be NFTs, right? And it's single shares of companies like well-known Fortune 500 companies. This is headlines yesterday. My pet projects, one of the startups I'm involved with, and this was way before NFTs, but we were looking to do blockchain-based attribution, like I mentioned earlier, to the content creators for news, right? So whoever's in the value chain of producing news, the idea was when their articles are read or consumed or resold or etc., we wanted to sort of give them their royalties through smart contracts. So this was way before even NFTs. And my other pet project is I'm going to go in my basement, look for all my printed photographs from like 20 years ago, pixelated ones, and try to sell them on OpenSea.
Good luck with that. Oh, this has been great. I want to thank the three of you so much for giving your time, especially you, Vinay, across the sea there in Abu Dhabi. So we so appreciate you giving us your time, the three of you. We have recorded today's session. We'll send out a recording. We'll also provide you with ways to contact our three panelists. Any final words from our panelists?
Thanks for having us today, Emily. Appreciate it. It was a great conversation, Vinay and Anurag. Thank you both for joining. Thanks everyone for participating via Q&A chat.
Likewise, I say just jump right in, start trading or selling or buying.
All right.
Thank you, Emily.
Let us know what y'all do.
Thank you, everyone.
All right, thank you. Have a great day. And we'll have to schedule a part 2 to talk more about Bitcoin and other cryptocurrencies. So thank you all. Have a great afternoon.
Thanks, everyone.